addressable markets that are growing, big addressable markets, and that company management teams are steering those ships in the right direction to take advantage of growing markets. So from that, I think it's more quality than the typical defensive sectors or industries that might be tempting for investors to sort of dust off.
Kate, we've seen the markets digest yesterday's Fed meeting and the press conference reasonably well. It seems like a no sudden moves type of message out of Chair Powell. But do you think there's a way to avoid what typically will happen at the beginning of a tapering or tightening cycle, where the market has to have some kind of a little bit of a jolt along with it?
You know, I would love to think that we've had enough forecasting and foreshadowing of change in policy that the market will be able to digest that moment, as you suggest, without any significant hiccups. But I don't think that will be the case. There'll be a couple of knee-jerk reactions, of course, if there's a meaningful change in language, or when we see people who are then sort of projecting a much more hawkish path for the Fed. But I don't think it's going to be extreme, because we've had so much talk about tapering, and we've had so much talk about the normalization of policy. And because we've had so many promises from Chair Powell and the rest of the Fed voters that they will continue to keep policy really accommodative for the foreseeable future. We're not talking about a situation where we're expecting many rate hikes into 2023, for example. It's going to be a normalization against a backdrop of sustainable growth. And if that growth doesn't manifest, or if there are challenges in the labor market, or if there are other challenges around the virus and economic restart, getting paused multiple times, then we know the Fed is going to be very thoughtful and patient about the path of removing accommodation. So I think we can feel like they have our back a little bit.
I know you talked about your portfolio and how you like the high-quality cyclical stocks right now. I also note here that you say you remain constructive on technology, U.S. and China. And was interested where in the U.S. and where in China, given the regulatory crackdown, you think it's worth investing in?
Well, Sarah, let me answer the question around China to begin with and say, over the medium term, we expect China to be an increasingly large portion of our portfolio. But we, are digesting, like everyone else, the sort of the changes in the regulatory environment, the anti-monopoly efforts, as well as, some, I think, new interpretations or at least new enforcement of policy in China. We understand that the technology sector and the Chinese consumer are enormous growth opportunities.